Okay, so let's have a look at the EUA markets. So here on the daily chart, we see a rising wedge. And once again, remember the falling wedge on the TTF front month hourly chart, where the falling wedge is showing us that the market will eventually resolve higher. Like rising wedges are showing us that the market will eventually resolve lower. So you are familiar with the concept that if we do have a downtrend and we can draw on a channel, then usually we would expect the market to swing within that. And if at some point we stop reaching the lower end of this channel, that makes it more likely to break higher. It's like a reaching failure. So essentially, a falling channel where the lower end isn't hit anymore, that is a falling wedge. So that's why this thing usually resolves higher. Now, in an uptrend, we would expect the market, oh, worst channel ever, we would expect the market to bounce within that. But if at some point we stop hitting the upper end of the channel, that usually signals bullish exhaustion, which usually resolves the market lower. So, in other words, this here is a rising wedge where we see that the up legs are getting shorter and shorter. Also, keep an eye on this level here, the 80s. Let's call this 80, right? It was hit once, twice, three times this month alone. So obviously, the bulls are trying and trying and trying, but they're just not pushing through. We do have a triple tested resistance. It's a psychological level, 80, and it's also the rising wedge border. So it's like a triple threat. I think it's fairly unlikely for us to push even higher. Now, let's have a look at what the bulls are actually thinking, right? So while the market was still moving higher, we still made lower peaks or like equal peaks now, of course, because we're not going anywhere, on the MACD. That's showing us that the bullish momentum is kind of exiting the market. What is the stochastic doing? Well, we just got a bearish signal here. We are also two-thirds or more than two-thirds deep into the rising wedge apex. So we are more likely for this whole thing to resolve lower. The rising wedge support coincides with this trough at 76.68. That means many traders are looking at the same thing. A break below this would indicate more losses. Now, on the hourly chart, we are seeing this ascending triangle. And once again, ascending triangles are usually bullish reversal patterns, right? We see a downtrend, we've got the ascending triangle, which then usually reverts the market higher. In this case, we came in from below. So this was a proper uptrend. So we could argue that this is probably usually a bullish continuation. But with the weakness we have discovered on the daily chart, this whole thing is either going to flatline for quite some time or we are breaking lower. And here I'm honestly split. I don't have a strong preference. As the things evolve, I would probably start hunting for something like a rectangle. I think this would make sense, maybe in the 79 and 80 important resistance area. So I feel like almost like this here could turn out to be a rectangle, which will eventually be resolved lower. I think this is the most logical case right now. I think uptrend acceleration seems really, really unlikely. So either neutral with an eventual inclination of solving bearish.